Thank you. First of all, it's appropriate that the sun was shining before we started to talk because it gets depressing, I think, a bit. In our own businesses, I will say that access to capital at this point is slightly less important to me than access to talent or labor. The challenge is one that I don't believe that I've seen before. In the past, you were seeking talent, labor that was trained in a particular way, and there's been some diminishment of people being trained in the sciences, for example, mathematical sciences especially, biological as well. So those prices increased slightly. But in the last few years, we've seen a confluence of circumstances that I believe have led to a very unusual labor market. In the United States at this time, if you are 25 years old or younger, we've had we're reporting the lowest labor participation rates ever. And that doesn't mean that people are not getting jobs. That means that people are not seeking them, which is a very different kind of a thing. By the way, I'm so grateful to you all for tolerating the fact that I don't speak German. Thank you. It's terrible. I should put more effort into it. I could order tequila in Spanish. That I can do. But my grandparents, of course, were German. They just didn't keep it alive. So I'm grateful to you. And if I speak too quickly, tell me and make a face, throw something, and I'll slow down. But it's very impressive that you're listening to this in English. So you have an under 25 set that are not participating in the labor market. Depending on politically who you speak to, they give different reasons. Certainly a fear of a pandemic, a fear of other things. This is a word that has become very prominent, which is unfortunate because I don't see that fear on the streets of Vienna. People are out having fun and enjoying their lives, as they should be. On the other hand, you see a young person who's been educated in the United States, for example, in a very expensive way, and they've been told repeatedly that there's an exchange for that investment. In the same way that it costs more to buy a Porsche than it might cost to buy a Kia. And so the expectation is that the vehicle is going to be superior. But the difficulty is once they exit, they discover that they may have overpaid for the quality of the education that they received. Or they may have gone to an institution that doesn't provide a high-quality education in that space. Those things, I think, bundle into a deceleration. We have among the lowest participation rates of males in the university system that we've ever seen in the United States. It's at a crisis level. I am a trustee for the largest community college network in the United States, which coincidentally is the largest in the world, about 175 to 180,000 enrolled students at any given time. In most degree programs, we're seeing numbers that are above 70% female or 80% female to 20 or 30% male. Granted, there are some exceptions, but generally speaking, women are overwhelmingly dominant in education now in the United States. That may be fine, but it certainly is leading to a cultural shift. You have large numbers of women who are not identifying partners in a way to settle into a life, which has an impact on me as an employer because you lose stability. In the past, when I would hire someone who was 28 or 30 years old, they generally had begun their life. They had found a partner, they had settled into something that you love as an employer, which is I love people with a mortgage and children because they stay right where they are. They don't go out at night, they're very responsible. They behave more like I did when my kids were at home. And then on the other end of the market, forgive me for being a little lengthy here, Barbara, but you've got people who are my age, in their 50s or older, who have simply withdrawn from the market. The claim has been that there was so much wealth generated over the last decade that people felt overly confident in their retirement position. You're in the insurance space, and you know that that's not an accurate statement. People don't begin to realize, if they're being honest, how much money is required for maintenance of a lifestyle into retirement in any real or legitimate way, and often people will accelerate their spending in retirement, which is a terrific irony. But if you speak to people individually, you find that many of them have been driven from the workplace by this instability that has gripped us. And those words are variable. On one side, you might call it wokeness. On the other side, they might call it important and necessary improvement in social order. I'm not sure it matters which, but I have seen an enormous exodus of employees from the labor market that I did not expect to leave for another 10 years. And then finally, you've got everyone in the middle. And what we're seeing there is people are fatigued. They're showing up, they're going to work, and they're fatigued. In my professional career of about, I guess over 30 years now of managing people, I've not encountered the kind of general animus or hostility that you see in the workplace. People had come to understand how to disagree over what football team you liked or what your particular dessert preferences were. But now when you come back and you see an empty office, I often will hear, or other managers will hear, where is that person? Are they at home working, or what are they doing? Why aren't they here? I'm here. Don't they see I'm here? I need to be off. Whereas before, if someone was out of the office, they would assume that they were in a meeting or that they were doing something. And now we've switched into this sort of notice of entitlement of not working exactly. I will say that the Wall Street Journal reported about 2 months ago that high performers, that's every single person in this room, people who are above average achievers, are reporting about a 25 to 30% reduction in their commitment to their workforce obligations. We can call it work-life balance, or I don't understand that, because to me work and life are all the same. I wish I could count back all the time that I was working as life that I get later, but it's a part of what I enjoy doing. It's who I am, and this is the way we've attempted to raise our family. So Barbara, when you talk about interest rates, of course they have a chilling effect, although I will say the largesse of government has filled our coffers and many of our businesses that were stable companies with excess capital. Companies that were under great duress before the pandemic received money that propped them up, but after the pandemic, they're back where they started from. And the companies that were high performers to begin with went through the pandemic very well, at least in the United States. So the question about interest rates, of course it's lowered prices, which I think can be good. In other words, I can acquire the same thing at a lower cost because the prices had become very irresponsible on a return model. Unfortunately, it does have some impact on growth. However, if I can't find labor, I don't know that it matters. We are certainly insured in every imaginable way, but I can't insure against that downside risk of losing that talent and not being able to recruit it. If this continues in an ongoing way, I'm not sure where we fill that pipeline in 10 years to replace those people as middle managers who have abandoned us early, if that makes sense.
Well, before I hand the mic to Lawson to talk about infrastructure and railways, sorry, it's a joke. This is a running gag between us. I just have to fill you in. Dr. Bader was invited to give a talk in Barcelona at one of the events, and he had his institute back then had published a paper on infrastructure, and the local moderator just had seen this paper and thought, well, Dr. Bader is an infrastructure specialist, and ever since we always talk about railway industry. I will spare you for now with that, because I will hand the microphone. I will hand the microphone to Richard and ask you, being in the finance industry, having been a former banker, educating kids on how educating kids on financial safety on the one hand, but also advising clients on where they can save money. What is your take on the current shock that we have seen, SVB, Credit Suisse, the disruptions of the banking industry? I may not comment on that, but you may. Please go ahead.
Thank you, Barbara. And yes, as Terry said, thank you all for listening in English. Entschuldigung für nicht sprechen, sorry, für nicht in Deutsch gesprochen, but I think that shows why it's better if I do it in English. I think that half the problems in the world at the moment are caused by governments trying to solve the problems that governments caused in the first place. and we end up with this dreadful spiral where everything that the government does generates more problems that they then try to solve, and that they then generates more problems in themselves. So why have we got high interest rates? Because the governments have spent years increasing the money supply and inflation is getting out of control. Why have we got a labour shortage? Because the government spent 2-3 years telling people that it was fine to work at home and we'd pay you to sit at home and not do very much. And yes, of course, people have decided that they like that. And of course, people have decided that they would rather have a more relaxed way of life. But yes, it's then causing all these add-on effects. There's other things as well in it, specific things. I mean, in Britain, we've just got rid of it, but we had this system where the tax system effectively capped the amount of money that you could have in your pension fund. Once you went above that, you got penal tax rates. And what happened, of course, was a lot of the people Terry was talking about, the high achievers, a lot of doctors in particular, got to the point that their pension fund was full and stopped working because it was becoming more costly to go into work and pay the extra taxes than it was to stop and take the money from your pension instead. So yes, there were always lots of things like that, but the big problem to me is, I think Terry mentioned fear, the fear of the pandemic and the fear of diseases and things. The big thing that I see in the world at the moment is really a culture of fear. That whenever something new happens, what happens? What's the government response? What does the press, what do the public keep telling them to do? It tells them to ban it, to regulate it, to tax it. And so we lose innovation. We've lost this culture of innovation, this culture of entrepreneurship. And instead we seem to have this culture of fear that we want everything to be regulated, we want the government to step in and solve all our problems. And it's stifling business. It's making it so slow, so difficult to do anything. I'm a non-exec director of several variety of businesses, and the time that it's taking to get any new projects off the ground is so long that businesses are actually giving up, and we're stopped with these things are not either happening so late or they're not happening at all. And yeah, I talk about tax. Tax is my thing, and yes, of course, tax is important. And high taxes discourage business activity, but actually the regulation and this cultural idea that you need to prove that something is safe before you can do it, rather than go out and try it. That's, I think, what's really hampering business and, in fact, social and personal life as well.
We will go to this tax issue in the next round, and I would like to ask you to present your thoughts on wealth tax and inheritance tax, because after all, our systems need to be refinanced again. Our coffers are empty. There's debt is rising all over. Ministers of finance are seeking revenues, so some people think they can, do it solve the problem via that way. Before we go to that, and before we go to solutions that I would ask Mr. Anker for, I would like to ask Dr. Bader whether, given the analysis from both gentlemen, we are seeing a paradigm shift, a shock or a change in our culture, in our both the communication, but also in our responsibilities of individuals and on enterprises. I will also say, becoming greener, is this a good thing? What should we or what can we do both on, and I would ask you now from the intellectual perspective, since you are with the Austrian or were with the Austrians theoretically, for what we can do from that side, but also on the practical side, because given what you support via DonorsTrust, what projects are those in order to find solutions?
That was one question. Yeah, okay. So Terry apologized for his lack of Germanic skills. I apologize that when the sun comes and hits my forehead and reflects in all of your eyes, that's a potential problem. So, okay, let's start with a couple of things. One, and it is related to what you just asked and a continuation of what you just said on the regulatory issue. While it is important and imperative that we discuss interest rates and debt and joblessness and taxation and spending, that is all correlated with the ideas of prospering and free markets and enterprise. It is the insidious growth of the administrative state that is unseen that I think has become the greatest challenge both to flourishing and the ability for younger people to understand the values and the relationship between being entrepreneurial, being productive. In the United States, in the 1920s, the Code of Federal Regulations, which is literally the master book that lists all federal regulations, was 8 pages. It is now between 85,000 and 95,000 pages. And it has been that way since the mid-2000s. So the Obama administration had about a 93,000. The Trump administration dropped, but it didn't drop by a lot, and we're back up to 90,000 pages. And that tells you not only are there more regulations, but they are more detailed in the regulation. And that reflects an inability for political parties to set a standard and then let others work out what that looks like. What has been the problem in the United States is most businesses now, from small businesses to large enterprises, all have compliance officers. They all have human resource departments, which spend all of their time addressing and dealing, and this is just the federal regulations, I'm not including what the individual states put on, which means in effect, not only do you have a Department of Agriculture in Washington, D.C., you have a Department of Agriculture seated, pardon the pun, around many entities and corporations which are in effect federal regulators but being paid by the business. And what that has done politically is that it has now linked the federal regulatory state with the theoretically independent business community, which is no longer independent, and that's created an interesting political alliance in the United States. Congress and the president and his respective cabinet officers have had little success reining in the administrative state. Each president comes in and says, I'm going to try to get rid of certain numbers of people, and all they do is go underground. They wait 4 years, and then they come back up with the next president. And one more example, and then I have something else to add to what you said, was there is a law on the books in the United States. It's called the REINS Act, R-E-I-N-S. It stands for, and this is hysterical, Rules of the Executive in Need of Scrutiny. And it requires Congress, any federal rule that has an economic impact of more than $150 million must be approved by Congress. In the 18 years this law has been on the books, Congress has never done it, and which negates the idea of a law in the first place. So that's just going, and everybody talks about spending, but so where this comes in with younger people who lack the knowledge of when we talk about a free market economy, when we talk about human flourishing and dignity, do not understand that what is actually behind the scenes causing the inability to pursue wealth, and wealth can be defined many different ways, they're not understanding the impact it is having on your individual ability to go out and start something new. Young children in the United States are now banned from opening lemonade stands on a street where they're selling for 50 cents a glass of lemonade to raise money for a little fundraiser, and the city comes by and bans them from doing that because they are now violating a local code and environmental regulation, et cetera. What signal have you just sent to a 5-year-old who's trying to actually be productive and doesn't even understand that he or she is exactly what we are trying to promote? And what do? They stop. And so young people lack the economic understanding of what a system is in which behind the scenes rules have a greater impact on their ability to flourish, and they instead focus on how do we get something more environmentally clean? Why are the rich so rich? They misunderstand the entire system. And this is partly an education fault of higher education. It is partly a parental fault. It is the lack of our ability to correctly define free market terms in a way that they understand so they don't see it as hostile.
Thank you very much. I would actually want one quick answer from Richard with regards to Britain. I mean, we as continental Europeans are really sorry that you have left the EU, but did you leave it for regulatory reasons of over-regulation, or what could you just elaborate a little bit on that? And is there something better now in place?
Mm-hmm. I wish I could say yes. I wanted there to be something better in place. I actually supported Brexit, Britain's leaving the European Union, not because I wanted Britain to look inwards, not because I wanted Britain to cut its ties with the world, but because I was finding that being part of the European Union actually limited our international range. I wanted Britain to be wider than that. I saw the European Union as Fortress Europe, that yes, it's free trade, open markets within the borders of the EU, but high tariffs, high regulation for anything outside. And what I wanted was, yes, for Britain to be the Singapore of Europe, that we would be the international global trading thing that, that we used to be. Sadly, that's not happened. We've had some unfortunate changes in government over the last few years, and Britain has become, I think, is in danger of becoming even more inward-looking than it was before. There are some good things. We've joined some global trading partnerships, some international trade has improved, and actually the drops in cross-border trade have not been too bad. But no, Brexit, I think, was a great opportunity, but at the moment is a missed opportunity.
Thank you. Terry, just add to what we have.
Sure. Richard, first of all,
Sorry, by the way, spontaneous order. Feel free to jump in on anything.
I'm delighted that you acknowledge that I speak English. As an American, it's unclear. The Brits sometimes think they own the language. I'm not sure. So when we're imagining what do we hope for, in the immediate term, let's create some stability and reasonable rates. While I may be less popular with some of my friends for saying this, I think those 0% rates or nominally zero were too low. We needed to create something that would provide some disincentive for market entrance where it didn't belong. What's happened when you stay at a low rate like that for an extended period of time, you've seen this in the US, people immediately as the rates went up had assumed far too much personal debt. Credit card debts are deeply concerning, and I think that will become a real drag on the US economy in a go-forward way. Many of us who are rational over the last several years believe that the markets had begun to overheat to some degree and began to extract cash with the notion that we would buy on the discount side. I think that's happening now, but it's happening because of government intervention. If you imagine all the different elements that you consider when you're building a business, there are many. Certainly labor, location, does your product work? Do people want it? Do you have the capital to get it done? When we start thinking about this financial circumstance, government regulation may or may not be the most primary problem. Interest rates may or may not be the most primary problem. It depends on the business that you're in. But it's clear that in a very solid market, regulation increases because it's, I'll say this, easier for the businesses to conform or to comply. And then when the market corrects, people are always astonished. It's the same problem that I talk to my own employees, especially young ones, when they're buying that, whatever it is that they need to buy or think they do, and they overbuy based on what their last bonus check was, as opposed to thinking about what they could afford in a more neutral or flat economy. And I think now we're seeing a swing back on the other side that's having an impact. And in this market where people are more fragile than they should be, they haven't addressed this adversity or hardship in the past, I'm concerned that we'll see increases in bankruptcy filings and other things. although I'm bolstered by the idea that human beings are very quick to adapt. In other words, we learn quickly, we learn how to adapt. If the weather changed dramatically, it would take most of us a few seconds to figure out to put a coat upon around us. But we're extraordinarily slow to evolve. In other words, if we walked outside and it was cold, I would challenge any one of you to grow a fur coat. I think that would take some effort. It just doesn't happen. That might take centuries or millennium or never happen. But we, right, but we imagine that human beings have evolved. And I don't believe that we have evolved. We've adapted to circumstance to the best of our ability, and those circumstances can adjust the other way. So when I think about our young employees, certainly, or even our older employees who are retiring, I think they will adapt if the market applies pressure to them in a positive way that we can take advantage of. Insurance, at its fundamental basis, is a conduit for loss spreading. You gather groups of people and we pool our risks together so that we don't bear the brunt of those risks individually. Perfect. So if I think about the most balanced economy, what are the various elements that we could pool together and let them share in some of this liability? Could government reduce regulation? Some. Could the Federal Reserve, or in your case, Dr. Kolm, the Central Bank of Austria, manage its desire to be aggressive about rate increases? Could businesses slow down about their adjustments? I think about Silicon Valley right now. We could teeter on a panic, both of banks and of employees, and fire too many. Prudence is what I'm hopeful for. Humans are quick to adapt and slow to evolve.
Well, thank you very much. With that, this was actually a perfect closing round here. I would like to invite you to give an applause to our panelists here.